Hey guys, what's up? It's Donnie here, and today I'm going to be doing my first non-software development video. I've been actually meaning to do this for a long time because uh, pretty much everybody is interested in making money, and I think a lot of people don't realize how easy it is to make money investing. You spend your whole life at a company, maybe 20 or 30 years, and I noticed that a lot of my coworkers and friends and people of that sort, they don't really know what to do with their money, and I always kind of feel like it's kind of a shame because they could be making so much more. So I'm always thinking to myself, man, if only I could tell them how easy it is. And I've been always playing with the idea of putting something like this together. And I was talking to a couple of my friends last night, and I decided I'm just going to do this. So I wanted to make a 20-minute to a half an hour at the most presentation. Hopefully I can do this in 20 minutes to tell you why you should invest and how you should invest. So here goes nothing. So first of all, there's various types of accounts that you can create when you want to make investments with your money. I'm just going to be focusing in this video on a brokerage. So the other two that I have listed here are IRAs. An IRA is an investment retirement account. So that's for people who don't plan on withdrawing any money until they're 59. So I'm not going to talk about those right now. If there's any interest, I could talk more later. But a brokerage is basically your bread and butter investment account. You put money in, you buy some stocks, and they either go up or they go down. So the key here is that if you do decide to sell, you have to pay 15% capital gains. So if you invested $100 and you turned it into $200, you would have to pay 15 bucks on the $100 that you made. Now, that doesn't mean you have to pay the 15 bucks immediately when you make the money. You don't have to pay capital gains until you sell. So if you just let your money sit there and grow and grow and grow and never really sell any of your stocks, which is exactly what I do, I don't think I've ever sold a stock in my life, you don't pay capital gains in that year. So I'm more of just a saver. It's kind of, even my brokerage, I kind of treat it as a savings, or I kind of treat it as a retirement account. So I very rarely sell any of my stocks unless it's an emergency, like I need to go to Japan or something and I need a lot of money. So, having said that, we're going to be talking about how to make a brokerage and why that can make you a lot of money. Okay, so before I get into the second half of this, I wrote this little web app, which is basically a calculator, because it's kind of hard to describe to people just how much money they can make unless you show them the math. If you're a programmer and you want to see the code behind it, I have it all here on my GitHub account, but I also embedded it into this PowerPoint presentation so that I can just, if somebody doesn't want to go through the trouble of figuring out how to do that and they're like, hey, I just want to use your calculator, I can just send them this PowerPoint presentation. And you can basically just double click on the little thingy there and it'll open it up. And I named it Karen and Faith's Investment Planner just because that was like the straw that broke the camel's back. I was like, everybody has been always asking me, like, Donnie, teach me how to make money investing. And I was talking to Karen and Faith, and that was when I was like, okay, that's it. I'm just going to make this stupid calculator so I don't have to spend 3 hours every time somebody asks me how to do this. So, I have the default values in here as representative of something that my dad told me when I was really young. And that kind of helped me understand how saving money was so important. So there's only a couple of variables here. There's an initial deposit, that's how much you start with. There's how much you add to it every year. There's what your expected rate of return is, and there's how long you're going to wait for. So this example here is basically represents what my dad told me when I was really young. He said, if you take like $5,000 or $10,000 when you're 15 years old, by the time you're 65, even if you never look back at it, never touch it again, never look back at it again, you'll be a millionaire. So the mathematics of this calculator shows that to be true. So according to my mathematics, $8,525, you put it away, increases 10% every year for 50 years, and then you have $1 million. So I want to introduce the concept of compounding interest. That is the key to understanding why investment is so important. So I'm just going to open up my calculator here. This is not like rocket science or anything, but if you take $5,000 and you multiply that times 1.1, which is basically saying I made 10% on my investment that year. Clearly, 10% of 5,000 is 500, so we made 500 bucks that year. However, what most people don't understand, and I don't understand why they don't understand, but the next year, if you make the same amount, it's not like you're making another 500 bucks, because the 10% is no longer being multiplied by the original number. Now the 10% is being multiplied by a larger number. So the second year, we actually made 550 bucks. And so on and so forth. It keeps getting bigger and bigger. As you keep clicking these equal signs, you know, at first it looks like it's going up by 500-600 a year, right? But once you get down into the years a little bit, now we notice my 15,000 is turning into 17,000, which is turning into almost 19,000. You know, we go forward a little bit more, 33,000 turning into 37,000. Now, you know, all of a sudden we're making $4,000 a year just on the 10% interest. So this is what we call the miracle of compounding interest. The more money you have, the more money you make. So that's why it's, you know, for lack of a better word, it's really stupid to not try to build up like a big war chest of money. Because if you spend your money, then it's kind of like quitting a job. It's giving up earning potential. Your money basically is something that makes money for you. So by spending money, you're losing earning potential. You know, keep going a little bit here, and the numbers start going up really big. And so my calculator here, you know, let's get realistic about this. Nobody's gonna never put a yearly contribution into it. So let's say I initially put 5,000 in, and then I put 5,000 every year in addition to that. So now I noticed after 50 years I made $6 million, which is, you know, pretty good. The funny thing is that at least in my experience, 10% is kind of a conservative estimate. I usually aim for more like a 15% rate of return, which would change the total to $41 million. However, you know, I'm not, you know, I'm only 37, so I don't have 50 years to invest. So, you know, somebody like me, I would say maybe when I started working when I was 27, I put in $5,000, and then maybe I said to myself, you know, I'm going to really save a lot of money. I'm going to put in $10,000 a year. And maybe I only planned on working for 30 years. So I said I'm going to start when I'm 30, and I'm going to retire when I'm 60. And let me aim for like something conservative, like 12%. So that's still pretty good. So even if I work for 30 years and I only really invest $10,000 a year, I'm going to have a nice chunk of change when I retire. Notice how dramatic that change was based on the rate of return. Going from 12% to 15% turned that $2.5 million into $4.6 million. That is how powerful that compounding interest is, because the growth is exponential. So exponential growth and compounding interest is the way people get rich. You know, I have this little quote here: to get rich, you have to be making money while you're asleep. You know, David Bailey said that, and that's true. I don't care if you make, you know, $200,000 a year and you work for 30 years, you won't be wealthy. The only way to be wealthy is to, in addition to that, let your money also make money. So the compounding interest, that's where the real money is at. That's where those really, really ridiculously wealthy people like Warren Buffett, you know, they don't work, they don't get a paycheck, they get a rate of return. So I'm going to talk about, at the bottom here, I put just some of my favorite stocks. I'm going to talk about this a little bit when I talk about risk and conservative investing and long-term investing. But these are just a couple of my favorite stocks: Visa, Nike, Disney. I'm going to come back to these in a minute, but before I do, I just want to show you this other one that you might not have heard of before, QQQ, which is Technology Power Shares. This is a nice one because, first of all, if you look at the 5-year chart, it's a pretty steep incline. And if you look at the holdings, what this stock is basically all the biggest technology companies. So it's Apple, it's Microsoft, it's Amazon, it's Alphabet, which is Google, it's Facebook, Intel, Comcast, Cisco. So this is a big combination of all the biggest technology companies. So, this is the most important thing there is, of course. Regardless, it's this number right here, the rate of return, is way more important than how much you actually invest. The length of your investment and the rate of return is the most important thing. So having said that, let's get back into this and try to finish it. Alright, so first of all, just the easy part. How do I get started investing? It's straightforward. Just go to fidelity.com. That's probably the best one. Open an account. You can open up a multitude of different accounts. Like I have a brokerage and a Roth IRA and a 401k and some other accounts. But basically, you probably want to start with a brokerage, and then all you have to do is link it up with your checking account so that you can send money back and forth really easily. You probably want to get the Fidelity mobile app on your phone, so every day you can take a look at, well, you don't have to do it every day, but I find it fun. But from time to time you can check up on your stocks, and it's kind of fun. It's kind of like a game. It's free money, so I don't know. Every day I look at my phone and I like looking at the money. So the other thing I just wanted to note is that some people are like, oh, what do I do? Is it hard to buy a stock? It really isn't. You basically click buy, and in this picture here I've shown how to buy 10 shares of Visa. You put in the symbol, you put in the number 10, and you click buy. I mean, it's pretty much as easy as that. So there's really nothing to it. And like I said before, it's kind of fun to just look at your phone every day and see all the money that you made. This is just a picture from Fidelity's site. This is not my account. This is just like a stock picture they have. But basically, you open up and it'll say this is how much the value of your stocks went up today or down today. And again, I want to stress that you don't actually have to worry about the stock market going up and down, because it's not actual money. It's just owning. You own a certain number of stocks, and they might go down in value one day, but that has nothing to do with how much money you have. You only lose money if you sell a stock when it's worth low. So I'm going to talk about that again in a second here. So the point though is it's really fun. Even though the main thing is to make money, it's also very fun to watch yourself making money. Okay, so I think this might be the most important thing that I have to say. That I hear this all the time, and people just, to be honest, people don't believe me when I tell them these things. So you don't have to believe me, but I'm going to tell you anyway. So everybody's always like, oh no, the stock market, it's so risky and it's crashing all the time, and it's just like a casino, right? People say those types of things. So risk actually, in my view, only exists for short-term or aggressive investments. So if you want to buy a stock and then turn around a year later and sell it, yeah, that's risky. I don't care what stock you're buying. You have no idea what's going to happen to it in the next year. Apple, I remember one year I bought a crap ton of it, and then it just tanked, and I didn't care that I was losing money. I just wanted out of it. So I lost some money because of that. It was kind of a short-term thing. However, the second bullet point is what I want to stress, and that's that long-term conservative investments have virtually zero risk. So what I was saying before is this third point. You do not lose money when the stock market crashes. So I'm going to use myself as an example, and if you're in the same situation that I'm in, where you're not trying to make money this year, you're trying to build up a nest egg for yourself 10, 20 years down the road. Even if the stock market crashes this year, and it crashes again next year, and it crashes again for a third year, that doesn't matter at all. If anything, you might want to spend those 3 years buying as many stocks as possible, because your holdings aren't money. You own a certain number of shares. So, one of my favorite stocks, I already said, is Visa. And Visa is, 10 years from now, Visa is going to be a lot higher than it is right now. I don't care if in the next 3 years it crashes 3 years in a row. 10 years from now, it's going to be a lot higher than it is now. So the only thing that I would do if the stock market crashed within the next 3 years, I wouldn't like panic and freak out and sell all my stocks. That would be stupid. That would actually be losing money. What I would do is I would buy up a whole bunch more stocks at that cheap price. And throughout history, that's how a lot of the wealthy people have made a lot of money. They, when the Great Depression happened, they bought a lot of people that had money bought up the stocks when they were pretty much free. And then when the market came back, those people were ridiculously wealthy. And then we have the situation we have now. So the point is, you don't freak out when the market crashes, even if it's going down for a year, 2 years, 3 years. If it's a stock that you have faith in over a period of 5 years, is usually my magic number, 5 years or even a decade, then you hang tight and you stick with it and you will make money. That's my philosophy. And I kind of have the data to back it up, actually, which I'm going to show you on the next and last slide. So, I invest with the 5-year conservative, steady stocks. And I have been investing pretty much since I graduated college, and I've never, ever lost money, even through the 2008 crash, the 2009 crash. No matter how bad the market is, as long as you don't freak out and sell everything when things are temporarily bad, then you don't lose money, because that's not losing money. That's just a temporary decrease in the value of your stocks. So to bring this to a close and to show you what I mean, this is one of my favorite stocks, and I have made a ton of money on Disney. So this is Disney stock in the last year. And as you can see, not only has it been very volatile, it's kind of going up and down and up and down, but it's actually lower right now than it was a year ago. So somebody who isn't looking at the big picture and doesn't know what they're talking about might say, oh man, Disney, that really screwed me up. I lost all this money on Disney this year. But that's really, really short-sighted, because for somebody like me who doesn't plan on selling my Disney stock for the next 20 years, on the next slide I have what Disney has done in the last 5 years. And as you can see, the Disney stock has more than doubled in the last 5 years. So freaking out in the short term is very counterproductive. It can cause you to make stupid decisions and sell stocks that are actually great long-term conservative investments. In general, this is the kind of stock that I look at. There's basically two properties of a stock that I like. One is a 5-year chart that has steady growth. I don't like to see a lot of volatility. There's a little bit of fluctuation here just in the last year, because this last year has been really bad. But I don't worry about 1 year. So in 5 years, if I see a stock going up and up and up and up and up pretty consistently over 5 years, that's what I consider consistent growth and conservative growth. Another thing that I like is really strong brand recognition and longevity. What I mean by that is everybody knows who Disney is. Disney World isn't going to disappear tomorrow. They're pretty much going to be here forever. I even get nervous about things like Microsoft. Like, who knows what could happen to Microsoft next year? But Disney is not going anywhere. Visa is not going anywhere. Nike is not going anywhere. Those are the kinds of stocks that I like. Everybody knows the brand names, and they're not going anywhere. So you could honestly spread out your money among a few stocks like that and never again look at it for the next 10, 20 years. And you pretty much have a 99.99% chance of making money, a lot of money on those types of stocks. So I really don't buy into the whole, risk and crashing fears. I think people who talk about that they think they're going to make money in 1 year, and it doesn't work like that. The stock market is about making a lot of money over a long period of time. So, in conclusion, I think I made this abundantly clear. So if you have a bunch of money sitting around in a checking account or a savings account, or under your mattress or anywhere, other than something that you've specifically chosen as a conservative long-term investment, you're literally flushing money down the toilet. I mean, it's just, I don't want to keep using this word, but it really is stupid to not invest money if you have, a good chunk of change sitting around, because that money could be sitting there making money every day. It's like, having somebody working for you and not using them. So, I really believe that, in the quote here, to get rich, you have to be making money while you're asleep. Stock market opens at 9:30, so, when I wake up at 10, I've already been making money for a half an hour. So, I hope this is at least minor informative value to you. Hopefully next time somebody asks me, Donnie, you keep saying it's so easy and there's no risk in the stock market, what are you talking about? Maybe I can just show them this YouTube video. So, maybe I'll do another one. If people like this, maybe I'll do another one on 401ks and Roth IRAs and stuff like that. But I at least wanted to get this out there to help people at least get started thinking about it. I mean, like I said, it's just a shame that people that have money and could be making more aren't taking advantage of it. When I see that, it's just like, it makes me really, it makes me sad. So anyway, that's it. And my next video is going to be back to my normal programming stuff. So I'm working on a video for my Python class. So if any of you guys are listening, I'll have a video for you guys soon. And thanks everybody who's been following me. I've been getting a lot of followers lately that I have no idea where they're coming from, but apparently they like my programming videos. So you guys inspire me. All right, I'll try my best to keep making some good videos for you. Thanks a lot. See ya.